Is it time to buy? It's once again by far the most frequent questions we're getting from clients. And when one asks that question, typically is not inclusive of really the more important parts of that question, which would be what to buy and what's the time horizon, right? Is it something that one wants to hold for, a few days or a few weeks or a few months, or is it like a year and a half time horizon? So the best way to answer this is again building perspective. So when we look at the market and we talk to people, the biggest problem that we see, and I've been very vocal about this over the years and I'm going to continue to be very vocal, the biggest challenge people have is mixing time frames. They are somehow find it very difficult to separate an investment time frame, majority of one's money, with a trading time frame. And as long as one cannot keep that separate mentally and physically, quite frankly, it is probably nearly impossible to be profitable over the course of time, because one continues to panic, or get overexcited and buy and sell at exactly the wrong time. So to address the question, though, I want to get to it. Is it time to buy? I think it's probably time to buy for a very diversified portfolio, meaning true diversification, meaning a portfolio that includes some U.S. stocks, some global stocks, maybe more than a long time, for a long time now. Most portfolios in the U.S. have, a 10% international exposure, which is laughable at this point. That needs to be much, much larger. Gold, commodities, usually not even part of most portfolios. Gold right now has gone a bit vertical, but ultimately that's part of the bull market of diversification we continue to talk about. So what you're looking at here is the S&P 500 on a weekly chart. The red line is the 200-week moving average. A lot of people I talk to that are following markets very closely, but also have a lot of groupthink to them because they're inside of these institutions and everyone's looking at the same thing. They think that's the line in the sand that's going to hold. It could. I'm very open-minded that it may not, and we go down to 4,000 or 3,500 in the S&P. The point is, it doesn't matter all that much for an actual diversified portfolio, because a diversified portfolio doesn't just hold Max 7 stocks, right? It holds a lot of other stuff. In fact, we run diversified portfolios that are actually up this year, believe it or not, because they're not as highly correlated. In fact, almost to some extent, almost inversely or not correlated to the Max 7 stocks. So I would say the answer is it time to buy for someone that has an 12 to 18 month time horizon for a true diversification. Again, not just a few Max 7 stocks and a couple of bonds. That is not diversification, right? True diversification. Happy to talk more about that in a follow-up video. If you guys want to leave a comment down below, I'm happy to do that if anyone cares. So I think for that time horizon and for that type of strategy, yes, it's time to buy. In fact, most people need to diversify their portfolios anyway, because they either don't have a portfolio or nothing that resembles a portfolio, or they just are not at all diversified in whatever portfolio they might have. From a near-term perspective, if you're asking it's time to buy, it's a trading question, and the market here right now is a trader's market. So to give you a bit of an idea, the S&P 500 an hour view is essentially in a very wide trading range. So, either one is day trading here, which has been the most profitable venture, and I think that's going to be one of the more profitable ventures for the next number of years, or one is swing trading, but swing trading is no longer how it was over the past decade, which is why so many people are completely confused and dazzled about this market. So what used to work, buy the 5% dip and then make a sandwich, come back, and the market's back at all-time highs, because of the passive flows in the markets and a lot of structures and Max 7 and all that stuff, which is all related, is basically stopped working. Now, doesn't mean we're not going to get at some point a really sharp rally, but for the time being, we are in a very defined trading range. So if it were to get to the low end of that trading range, the odds of buying from a swing trading perspective is higher. At the very high end of that trading range, which might be on the S&P, quite frankly, all the way up to 5,700, is probably time to be selling more. So individual stocks, understand that the individual stocks trading game is way more difficult than most people have led you to believe over the past decade. Again, I've been very vocal about that, because the reason why most stocks have gone up is largely due to passive flows, fiscal stimulus, a lot of that not being the case anymore, or nor nearly as much, and could actually go in reverse. So being an actual trader and investor here is finally important again for the first time in a long time, and that's why again a lot of people struggle. So long term, yes, for a truly diversified, and I mean true diversification, I do think it's time to buy with a 12, 18 month horizon. In the near term, you got to be a trader, pick your spots, and be agile.